Good afternoon. You've tuned into ET Now. This is Closing Trades with me, Cheryl D'Souza. Along with me, I have Nikunj Dalmia. And as you can see it on your screen, we are holding on to the positive territory when you talk about the markets. Yes, you had Trump that took action when you talk about the auto tariffs. But in the same breath, he did say that the reciprocal tariffs would likely be lenient. And that could be having is a positive rub-off effect on the rest of the market. If you talk about the auto pack, then no, that's not the one that is seeing a great day with the likes of Tata Motors or, for the matter of fact, Sona BLW. They are the ones they've been hit the most because the Trump's announcement of 25% tariffs, auto tariffs, are the ones that are going to impact both of these companies massively. Tata Motors being the fact that JLR, the 27% of the sales volume in North America is what will get hit for Tata Motors, while for Sona BLW, it is one of the key suppliers for Tesla. So that's one of the reasons why you're seeing Sona BLW under pressure in trade today. Ditto coming in for some of the Motherson, because that one also is a major auto player in trade today. But the markets, Nikunj, I believe, is surprised us today positively, given the fact that we are seeing strong resilience, at least in the Indian markets.
Life surprises every time, Cheryl. What you always imagine does not happen. You know it more than anybody else. So that's what markets are, I guess. It surprises you, and thus when we thought that nothing is going to go right, everything seems to be going right. Sandeep Sabharwal is ready. Let's connect with him. Kunal, 23,800 looks like it's going to be tested again.
Yeah, should be tested again, and I think we should be breaking past about those levels. So I think we should be ready for 24,000, 24,200. There are a slew of events at the start of the month of April, and the way the markets have panned out in the last 4 months. So that backlog of that major OI selling, which was happening for the index as well as for individual stocks, that's now behind. And I think we should be looking out for much more positive outlook, at least in the start of the April series.
Sandeep Sabharwal has been bullish and he's been right, and let's understand if he's still bullish. And why do I get a sense that he's made a lot of money in the last 1 month? When you see Sandeep Sabharwal smile, means by chakka laga, right?
I'm always smiling.
Sorry?
I'm always smiling.
When you're smiling like this, the way you're smiling. Or maybe I'm doing the closing show after a while, actually, so maybe. So how markets looking?
Markets are fine. I think still people are quite fearful of Trump tariffs, what's going to happen on 2nd April, and there is generally a feeling of negativity. So I think people have closed their minds to a lot of macroeconomic developments, which include the kind of flexibility we are seeing in monetary policy as well as forex policies from RBI, positive news flow coming from the new head of SEBI in terms of facilitating FIs, talking to them, understanding their issues, etc. And on top of that, I think we've had a very tough macroeconomic year, like financial year, due to tight liquidity, a lot of elections, a lot of uncertainties related to first the Indian election, then the US elections, etc. So I think a lot of these things will not be there going forward. So markets cannot keep on falling on tariff word every time. So I think you can say tariff ad nauseum, but eventually I think the incremental impact on the markets keeps on reducing. If there is some resolution of the global conflict involving Ukraine and Russia, I think that also will be a good overall positive, because a lot of Indian businesses could gain out of re-entry into the Russian economy and doing business out there. Oil prices could get capped because of that. I think overall things are not bad at all. So I don't think we should be bearish.
Right, things are not that bad. Doesn't merit to be bearish at this point in time. Kunal, that's what the charts are telling you as well.
Well, yeah, and I think we've seen good mix for the markets in the last 3 weeks specifically. So when you see market breadth improving, sector trends shaping up, there is hardly a point, because the markets have a tendency to factor in a major part of the expected news flow, only something which has been unexpected or something which comes out out of the blue. And that's the only factor which the markets generally take a surprise hit. But I think looking at the way the stance has changed from the FIIs, the calm which the markets have been showing, sector patterns, etc., I think we should be in for much more upside.
Right. CA, what's your take coming in on the markets? Very good afternoon to you. Given the fact that, yes, we've seen a sustainable bounce back, at least for the markets, FIs are buying, and that's also a good sign if you look at it. But what's your take? Which is the one sector that you think will lead the markets higher going ahead?
Good afternoon. Thank you so much for having me in the show. See, market has definitely turned into buy on dips from that earlier sell on rise, and every dip is a buying opportunity in this market. So for me, Nifty specifically, if you want to look at the levels, 23,800 will be the first level. And once we cross that, surely we are headed towards 24,200 and 24,700. Similarly, on Bank Nifty, if you see, 51,000 will be the immediate support now, and we are headed towards 53,500. This market has just now turned FII buyers, and we have already seen that move of 1,500 points plus on Nifty. But this move is to stay, and I'm very, very bullish on market. To answer that sector which can do good, for me, private banks and NBFC will be the top sector which will do very, very good. So whether it is HDFC Bank or even Kotak Bank, ICICI Bank, even after the move what you have seen in last 2 weeks, all the dips has to be bought in private bank, and in NBFC it's a choice whether you want to go for Chola Finance or even for that matter Bajaj Finance.
Sorry to interrupt you, CA. I'll come back to you. Rudra, I'll just come back to you. Let's just head across to Times Now Summit where you have the BSC, the head talking right now.
The income earning age and therefore increase the consumption. Consumption is a very important part of an economic well-being and to keep the wheels of economy running. Keeping this in mind, our Honorable Finance Minister in the last budget released and put in hands of the retailers around 1 lakh crores so that when consumption gets boosted, manufacturing and all the other allied activities get a boost. When you manufacture more than what you consume, you export, that becomes the next very important leg of growth for any country, and we are extremely doing well. For all this, you require a manufacturing activity to happen, and that is where the investments come in. In all these fronts, India is doing wonderfully well. The demographic profile of India, which I refer to, augments very well in all these areas. India saves around 30% of its GDP. Presume even 25% of it is going to come into the capital markets. We are talking about around 150 lakh crores per annum coming into the capital market. The market cap at this point of time in India is around $5 trillion US. This has grown by 118 times in the last 10 years, a CAGR of 17%. You have seen that there is a relationship between GDP and market cap. Typically, the relationship hovers somewhere between 1 to 1.5. If that relationship is even now maintained, if you look at that and if it is going to continue, by 2047, we are talking about a market cap somewhere hovering around 40 to 50 trillion. Where this market cap will come from? Will it be only from the existing companies? Not necessarily. More and more companies are going to come in from various emerging sectors in India, making it one of the largest economies. This is where the role of BSE becomes very important. While Times Now is celebrating 20 years, we are happy to tell that BSE is celebrating its 150th year this year. It's a very happy moment for us. What has been the role of BSE in all its 150 years of existence for the growth of Indian economy? BSE has helped significantly in the formation of capital, ensuring liquidity of the capital raised, transparency in the market operations, ensuring corporate governance, and providing tools for risk management, in all ensuring and building trust in the market. In this committed service of 150 years to the market, BSE has ensured the emergence of multiple sectors, multiple big companies and corporates, and in all helped in democratizing the access to the markets and access to the information so that more and more investors can participate significantly and meaningfully in the building of nation.
All right, in conversation with CA Rudramurthy, Sandeep Sabharwal and Kunal Botra. Flash that Aramco wants to supply, what is this? Aramco wants to
invest in Indian refiners.
ये कितने साल से बोल रहे हैं यार? I mean, they've spoken to Reliance and they've been coming here and there. Let's look at Reliance, HBCL, BPCL. It's not that easy, right?
So this time what they're saying is they are in talks to invest in ONGC's planned Gujarat refinery and also eyeing BPCL's planned Andhra Pradesh refinery.
It's not that easy, no? I mean, these are not very small bilateral agreements which happen. A stake sale coming in, government companies. What I've never seen stake sales happen in government companies, in subsidiaries. The one which happened, I think, was one with BP, British Petroleum. Just search for it. I think British Petroleum 2001, some Panna Tapti, something which happened. The British Petroleum came as a technology partner. And then you had something with ONGC and Global, and then the Imperial was one, and then I think BPCL had one global acquisition which we've forgotten about. So okay, let's see when it happens. I hope it happens. 23,600 and 100 points are for the Nifty. Sandeep, that brings me to the broader point now. The bargains are over. Markets are neutral. Now it's about finding pockets where earnings could continue, earnings could surprise, or compounding could happen. Any thoughts on where we are in for a steady set of earnings where compounding or the compounding will continue and earning momentum will stay intact? Sandeep?
If you look at the large cap side, I think financial should continue to do well. I think where we could see greater delta in terms of performance could be the NBFCs, where easing monetary policy always benefits them more than the large banks. So I think that's where momentum could continue. So I think Bajaj Finance is one stock which has already done well. A lot of the other NBFCs have somewhat lagged behind, and I think we could see a catch up out there. Many construction companies also are seeing good order flows now, and execution cycle will pick up, and they also benefit from lower interest rates. So for example, one stock we hold, NCC, I think over the last 10-15 days itself, they have won 15,000 crores of orders, and valuations have come down from, I think from 350, the stock's fallen to 200. So valuations have become reasonable. So I think some of the companies in capital goods infra could also do well. And overall, if I look at the large cap basket, I think except for IT stocks where the outlook is hazy, rest of the large cap space looks fine to me in terms of performing and doing reasonably well. And pharma could have some short-term aberration if some tariffs and all come. But given the fact that it's not easily, what they are making is not easily replicable at the cost at which they make, in all probability, the costs will just be passed through and the impact will only be short-term.
Sandeep, there is this whole thought that, and just look at it actually, which is that the decline in Zomato, Kunal, and I'm going to ask everybody this question. Sir Rudramurthy, can you hear me? I'm coming to you on this question. Okay, first I want to mark the point here that Avenue Supermart has started rising and Zomato has started falling. Swiggy, frankly, has been a no-go after IPO. And this entire halabaloo, that's the right word, this entire halabaloo which happened in the quick commerce space, more competition, no delivery, is now hurting these companies. DMart comes out and says that we will invest little in quick commerce, but we want to focus on what we understand, which is the big box retail. And look at what markets are telling you. Zomato is down 30% from the high. DMart is up about 20% from the recent low?
Approximately 20%.
20%. So Sandeep, time to flip out of quick commerce, go back to value retail, because whatever we may argue, ultimately in India, the kirana wala never goes.
We can flip out if we have it. If you don't have it, you can't flip out. The fact of the matter is that the allocation of capital of these companies is very bad. I think look at Zomato or Swiggy. So I think they make big money out of their food business, and they're investing in a business where the returns are going to be low, like the quick commerce, and disproportionate money is going there, and competitive intensity is very high. So I think it's going to be a tough phase, and it coming into the Nifty also distorts Nifty valuations because there's going to be no earning for some time. Like the biggest concern for DMart, Avenue Supermarts, was that they are not recognizing the change, that they need to participate in quick commerce and they need to have some setup where they can compete with these guys. So I think given the fact that recent commentary indicates that they are taking steps to address this, I think market has started rewarding that somewhat.
The whole point. So if somebody has Zomato, move to Avenue Supermart, and if you don't have Avenue Supermart, buy it, or any, for that matter, any value retail. I'm just trying to put that point.
No, I think Avenue Supermart's valuations still are excessive. So given the growth rate which they've been showing, so I'm not a buyer there, but I would say that yes, moving out of Swiggy, Zomato into some other stock, like there's a whole market, right? You don't need to be in that space itself. So then and that makes sense. I think these companies are still going to have a tough time for the next 1 year at least, before maybe realization comes that just burning up capital again makes no sense.
Rudra, what's your view coming in on this one, the entire pack? Will it be Avenue Supermarts that you want to look at, or is it going to be still you want to be with the quick commerce space? You have now notes actually coming out, brokerage notes that have downgraded these counters. Like you had Bank of America yesterday downgrading Zomato to a neutral from an erstwhile buy position. Swiggy also, they've downgraded to underperform from a buy position and cut the target price as well. For you, do you think that you will look at these players, or will you look at Avenue Supermart once again?
No, on charts, very clear view that Zomato has broken even that support at 203, 205 zones, and it is just continuously falling. And for me, 180 is the next support on Zomato, and it should reach there. For sure, purely based on chart, I will switch from Zomato to Avenue Supermart if you have positions in Zomato. And other way around, if you see the chart patterns in Avenue Supermart, definitely it is making that rounding bottom formation, and now the breakout is coming. So if it sustains above levels of 4,100, a sharp up move towards that 4,500 and 4,800 cannot be ruled out. So purely based on chart, definitely a yes, switch from Zomato to Avenue Supermart. But there are a lot more other shares which are of mouth-watering valuation also right now. And charts are also beautiful, where you can pick up stocks like, let us say, GAIL looks very, very strong to me at current market price. And the strong support for the stock is at around 170. Current market price still gives me comfort, both in terms of fundamental valuation and also on chart. Similarly, if I have to pick something from metals, Jindal still looks very, very strong to me at current market price of about 900. So you have sector specific and stock specific opportunities available, like some of them which I mentioned. But surely I will switch from Zomato to Avenue Supermart if I have to make a choice within these two.
We're discussing L&T in the morning. I think Kunal feels that it's moving out of the neutral territory. Sandeep's been making this point for a while that, go look at L&T, look at L&T. And I think BNP Paribas and CLSA, they both made this point that look at L&T.
Yeah, you were discussing in the morning.
We were discussing it in the morning. Another interesting one, which is HDFC Bank, BOFA right?
Yes. No, it was Citi.
Citi,
90-day catalyst watch, positive catalyst watch, HDFC Bank. And that one has actually moved up higher also in trade today.
Sandeep, is it time now to go back to this erstwhile FI favorite, HDFC Bank, ICICI Bank? I mean, typically, you know that when FIs come, what they will buy and how they will buy.
Yeah, if FI flows continue positively, then obviously the biggest allocation goes to the financials. And typically, like you rightly said, HDFC, ICICI have been the favorites. And then to a lesser extent Kotak, Axis, and possibly SBI also. So I think if the call is that foreign inflows will sustain, then financials have to do well.
That's the view coming in on the while FII favorite, HDFC Bank. But on that note, thank you so much, Sandeep, for being part of the show and actually sharing your views in the closing trades. But coming to you, Kunal, let me get your closing trades for all of our viewers.
So bullish on Bank Nifty, and that's why I would pick HDFC Bank as a fresh breakout candidate today, especially with the stock breaking past above the series of the last 3 to 4 days of closing high.
All right, so it's HDFC Bank closing trade pick coming in for Kunal. CA, Rudra, what's your closing trade?
So for me, GAIL looks very, very strong. Buy at current market price. One can definitely buy even in futures. Looking at targets of around 200, 210 to come over a period of a month or two. But then even for very short term, GAIL looks very, very positive. With a stop loss of 170, definitely one can take positions in future for April month.
So those are the closing trades coming in from our experts. On that note, we slip into a break on this edition of the show. When we come back, we'll talk about the markets in the last half hour of trading session. Don't go anywhere.
8 minutes to go. FNO expiry. Mayuresh Joshi is ready, and CA Rudramurthy is perhaps trying to identify the next trade. क्या देख रहे हो CA laptop पे? Any
so
trade?
For me, Nikunj, definitely there are a lot of good stocks in futures. One can go along for the next series, that is for April. Trent is one of those stocks which has given yesterday and today good price movement with addition in open interest, good rollovers also seen in Trent. So one can look at buying Trent for a target of 5,800 positionally and keep a stop loss of 5,250 for this long trade. GAIL was another trade which was very, very strong, which I just told for closing trade. Another counter from metals which looks very, very strong is Jindal Steel. Risk reward is very favorable at current market price of around 900 rupee. Keep a tight stop loss of 880 and look at targets of 1000. So it is a 1:5 kind of a risk reward trade from current market price. So a buy on Jindal Steel and a buy on Trent, and even GAIL looks very, very strong. All this can be taken long for April month.
Mayuresh Joshi, someone told me that you came to our office and you're trying to climb a huge wall outside my office. हुआ था ऐसा कुछ? You had to climb a 15-feet wall.
No, it was not 15th feet, Nikunj. I was already late for the meeting in the adjoining premises. I had no choice but to go.
We actually climbed that wall, 12-feet wall. अरे उल्टा आ जाता यार. You could have just taken the U-turn and gone back.
समय नहीं था, नहीं तो आ जाता.
You know, I'm convincing Sandeep Sarwal, who lives on the other side of the wall. It is not like a Uchana wall or something. It's like a simple wall in our compound. He's struggling to, he said, I can't come because I have to take a U-turn and come. That 10 minutes more. And Meru just climbed that wall. You climbed that wall, right? Disclosure.
Climb that wall and the market is climbing in the wall of worries, Nikunj.
No, you climbed the wall. That is more important, boss. At this age, to climb a 12-feet wall.
Yeah, I could do that.
And somebody was with you whom you made the climb the wall.
Sorry?
There was somebody with you, you pushed him to climb the wall. हमारे कंपाउंड में क्या होता है हमें पता होता है ये जर्नलिस्ट एट द एंड ऑफ द डे
I like how it's all spreading right now. But given the fact that the markets are climbing the wall of worry, Mayuresh, like you said, but where are they actually parking their bets at this point in time, or where you think they should park their bets at this point in time, given the fact that we've seen sizable correction? And let's be very honest, you know, India growth story is not going anywhere. The fundamental story of India is pretty intact.
No, absolutely. I think no two ways about it. And therefore, I think the consensus call that remains on the street remains with the BFSI space. Even what we see on our sector rotation graphs, BFSI still seems to be the strongest sector and is still placed in the strongest quadrant of the market, which means earnings should keep on continuing growing at a good pace. Obviously, it's a consensus call in terms of the sector as a whole. But generally, I think this sector should do well. Valuations are not too expensive as we speak. And if earnings are getting backed up in the next few quarters, every hope that if the rate cycle starts coming down in the second half of this financial year, there is additional impetus that probably comes through as far as earnings is concerned. And I think the kind of quality that we probably have, specifically in frontline leadership stocks, they should be able to perform well. Asset quality pressures are coming off. You're probably expected to see reasonable amount of credit deposit growth. The CASA deterioration is probably behind us as we speak. Provisioning is very well done in terms of the restructured assets. They're very well accounted for slippages as well. And therefore, I think the system probably looks geared for decent and very strong growth going forward. So Kotak, ICICI Bank, leadership stocks in the private space, brilliant ratings and rankings as we see it, should continue doing well. State Bank, Bank of Baroda within the public sector enterprises should also continue doing well as far as earnings and concerned.
Kunal, there's a trade in banks. Now, 3 years ago, if you bought HDFC Bank, you did not make money.
Yeah.
3 months ago, if you bought SBI, you did not make money, right? So what is the trade in banks now? Because banks is fashionable, but within bank, the divergence, I think, is so sharp that it is important to get the name right. At least a basket right. So is it PSU? Is it small, small banks, or is it only private?
So we go back last 3 years, Nikunj. So from 2021-22 somewhere, it was the time where the mid-cap banking, they did exceptionally well. And the PSU banking lot, of course, both large caps and mid-caps, they did phenomenally well. And in that phase, you saw the large cap stocks remaining more or less sideways. We call it sideways because these stocks, they hardly gave any kind of a major compounding return for themselves. Now I think that the traditional names are making a comeback. So over the last 2-3 months, because the markets went to a reset kind of a mode, and even the bank Nifty went to a reset mode where you saw the high beta ones falling by 20, 30, 40%, and the low beta ones which had not performed in the previous leg or in the previous trends, they are the ones which start to outperform. Now that's a classical trend which which comes back into the markets at every point of time. So we see these phases in 3-4 years time span for sectors and for stocks. I'll give maybe a non-related example, something which happened with the IT space. I think in 2021-22, you had the mid-cap IT stocks which outclassed the large cap IT names, and then came a phase where the large cap IT stocks, they started to perform exceptionally well. That was a multi-month, multi-quarter, multi-year uptrend also for these IT names. I would sense a similar kind of a phase for the large cap private sector banking names going far. So you always have to back the relatively strong names. In this case, Kotak Bank, ICICI Bank and HDFC Bank are the top 3 names which are coming back in the relative strength ranking on the private sector banking names, followed by Axis Bank, which I also believe could be due for a very big catch-up.
Okay. And that same question goes to Mayuresh Joshi. Mayuresh, if you bought SBI at the peak of COVID pandemic, you actually hit a home run. Similarly, with the Can Bank, Union Bank, all of them are up 3-4x from there, right, Kunal?
Yeah.
3-4x, right? But if you bought Kotak Mahindra Bank at the peak of the pandemic, you actually did not enjoy the fruits of this bull market. For next 6 months, what is a trade, Mayuresh? And for next 12 months, which is a good investment?
So Nikunj, as I mentioned, I think we discussed this last time as well. I think Kotak is probably coming there right of the charts as we speak. Again, if you just dissect how Q3 numbers had played out for Kotak, the NIMs were at 4.93%, which showed a sequential increase. The expectations in terms of the embargoes that were laid out, both in terms of credit cards as well as unsecured personal loans, I think that is largely behind us as well. The book that they're probably taking in from a large private bank, that should start playing out in Q4 as well. And therefore, the CASA deterioration that we've seen for the system as a whole, also for Kotak Mahindra Bank, should probably start bottoming out. NIMs should get maintained in this range itself and improve, as I said, with rate cuts expected in the second half of this financial year. And therefore, the entire book and the construct of the book that we're probably looking at, strongly placed in terms of both credit growth that is expected, deposit growth, which should be decent enough, supporting NIMs. And therefore, return ratio should improve drastically as we speak, 4 to 8 quarters. At the same time, looking at cost-to-income ratios, they have come down. And therefore, I think the key parameters that you're probably benchmarking Kotak with the other larger private ones, I think it should largely stand out. So remain extremely optimistic on Kotak and ICICI Bank from the large private names.
Astral 15 rupees higher, and Mayuresh, there is a whole talk of where the pipe stocks are moving, where the wire stocks are moving, and I'll just put a description here, guys. So wire companies today have capex, which is called as gross block. How much you invest. Mayuresh, you can interrupt. I'm trying to simplify it, and I could be completely wrong. You are the expert here. What is called as gross block? Whatever capex they've done in the last 3 to 5 years, they have got additional revenue of about 5 to 7 times on that. So for example, Polycorp did a gross block of 1500 crores. They've got a revenue of 7500 crore. The margins there are anywhere between 15 to 20% because it's B2B, B2C. So everybody is saying that by doing little capex of 1000 or 1500 crore, we can get 7000 crore turnover. Why? Because Ultratech is trading at what would be called as a commodity company. It's not getting a great P multiple. So builders are coming out and saying that we will try and change the complexion of Ultratech, take the cyclicality out, and that I think the attempt here is. And what has happened in Asian Paints, could that happen in the wire industry? I don't know. All I know is that the P multiples will get crushed because competition will intensify. Mayuresh, I've tried my best to sum it up, but am I right if I say like this?
Absolutely good. And again, I think look at the big picture, right? I think the entire home wire and cable industry is around 21 to 25,000 odd crores. That's the broad gauge that we're probably getting. 65 to 70% of that market is organized. So to a large extent, the unorganized players form 30% of the overall market, which is around 6 to 8,000 crores. The other aspect is that this industry is growing around 7 to 8%. So this industry always grows in terms of how the GDP of the country is expected to grow. When new players start coming in, and you're absolutely bang on this, Nikunj, I think the expectation here is that there might not be a pricing dent that we've probably seen like the paints industry, because a large part of this market is organized. The newer players will have to create a separate ecosystem in terms of distributors, dealers, or tie up with the existing ones that are probably doing the business at this juncture. But yes, there will be some element of undercutting that probably happens. Higher dealer commissions that do get passed on as well. And therefore, competition intensity is something which will drag the organized players' profitability to a large extent. You're absolutely right. I think you need to be very, very specific when you're probably talking about cables, wires. But the industry construct probably suggests that significant amount of growth and a compounded growth over the next 5 to 6 years probably look steady state, no great re-ratings that are probably expected in any of these markets.
That's the take coming in the cables and wire space. No doubt that that's the one space that will see some competition also creeping in. But along with that, I wanted to talk about the EMS space actually. Mayuresh, given the fact that today you have a note which is saying that room air conditioners and electronic manufacturing services sector is poised for significant expansion, this on back of favorable macro tailwinds as well as shift towards the domestic electronic goods. And we've seen actually a lot of government impetus coming in for the EMS space in particular. We've seen that sort of a rally play out. Then we've seen the cool off also in most of these players. What's your take? Do you think it's a space that you can still look at and there will be a bright prospect going ahead?
So again, I think the market size is expected to triple from here on. So I think there is significant scope for the EMS players to probably participate in the market opportunity that comes through. But again, I think as a construct, if you're looking at the OEM players, they're probably doing outsourcing work for a lot of OEM makers to a large extent, where margins are very, very thin. So you're probably looking at single-digit margins happening on this front. I think the more innovative part that comes through here is the ODM part, which is the original design manufacturing, which has started creeping up, but is still very, very minuscule for a whole host of EMS companies. There, the margins are better, but the expectations in terms of how much of an ODM share will they be able to garner in terms of their overall revenues as a percentage of top line as well, still remains circumspect. And therefore, I think some significant margin expansion is something that is to be believed is might not happen. The other way in terms of looking at these things are how valuations are probably played out for a whole host of these EMS players. When we're talking about Dixon, Amber, Avalon, Sigma, SGS. And therefore, I think valuations still remain very, very expensive. And if earnings do not match the kind of expectations that the street has probably put forth, I think these stocks might actually go into a long, long time consolidation. I think the better play as we see it at Markets with India is consumer durable, the core consumer durable plays. So air condition manufacturers, as an example, right, have done exceptionally well. But the momentum there can very well continue. For a stock like Blue Star, as an example. Let's look at the cabling part of the business itself. So the HVAC market itself is expected to triple from here. Almost $6 billion is expected to be around $80-90 billion as we head into the next 7 to 8 years. And therefore, a stock like KRN refrigeration, I think, might do exceptionally well, in my opinion, if somebody has that longevity and expectations of how the industry will probably grow. So my own sense is that a few select core consumer durable stocks might actually do well. EMS players still expensive, in my opinion, and they might probably struggle if earnings do not compound at a pace which the market expects, which is quite significant at the current juncture.
All right, so that's the take coming in on some of those EMS plays. Kunal, let me come to you, ask your BTST ideas for our viewers.
Yeah, I think a couple of BTST names which I'll suggest at current levels. The first one is a buy on Hero MotoCorp. That's a chart which I believe is looking attractive for a potential breakout from current levels. 4,000 is the target, stop us at 3,600 for Hero MotoCorp. And the second is a buy on Avenue Supermart, something which I've been bullish on earlier, and we've been discussing this of late. So buy with a target of 4,200, stop us at 3,900.
All right, so that's Avenue Supermart as well as one of the counters that Kunal is bullish on, and Hero MotoCorp as well. What about you, Rudra? Which are your BTST ideas for our viewers?
So for me, United Spirits looks very, very strong. Addition in open interest, prices moving up, delivery volume up. So all that tells to me that United Spirit is headed higher. Look at targets of around 1,435 to 1,450 on United Spirits with a stop loss of 1,390. And another stock which looks very good for me will be Indigo. Look at targets of 5,250. In fact, Indigo is a stock to buy for all time frames and a must for 2025 portfolio. Looking at big targets, but even for BTST, one can look at buying Indigo.
All right, so those are some of the BTST ideas coming in from both of our experts. But let's talk about what exactly is happening when you talk about L&T. Remember, it's among the top picks for CLSA as well. Yesterday it announced it's won that ultra mega order worth over 15,000 crore rupees. L&T holding on to gains of 1.5% or so. Bharat Forge, that one unit has actually entered into a JV agreement with Duma Engineering Group, that is Spain's. And on back of that, just take a look at Bharat Forge. No doubt there are other news flows also actually plaguing the stock in today's trading session. And that brings me actually to the auto pack. Mayuresh, how should one read into this entire space, given the fact that, yes, now this one has been the latest hit and has been hit hard by Trump's tariff. But what's your take on the entire auto space? And leaving this news piece aside, would you be looking at it?
Very, very selective. Because I think what you're probably looking at in terms of Trump tariff impositions, and if they are expected to continue at the rate at which Trump is proposing, I think it's going to take a significant hit. A lot of global OEM there. Obviously, which sees that the EV adoption is probably slowed down globally as well. And therefore, the kind of accelerated R&D investments done on a lot of EV mobility platforms by a lot of global companies, including JLR, including Volkswagen Group, including the Mercedes Group as well, and BMWs. I think you're probably expected to see some element of cash impairments happen this year, at least, till demand probably starts coming back. Until that happens, I think you are expected to see a lot of these companies take a hit on their balance sheet. And therefore, domestic-oriented companies actually might continue doing well. Two-wheelers in particular might continue doing well. In our opinion, I think TVS Motors, decent set of numbers till Q3, still expecting margins to remain steady. Cost optimization programs will ensure steady margins probably come through. New models, new platforms that they're probably introducing, new geographies that they're now entering into will give them added impetus in terms of volume growth and therefore operating leverage onto their balance sheet. Little bit expensive, but rating rankings, institutional holding, as we see it in canceling, looks super. So I think two-wheelers, TVS probably stands out. Maruti might probably act as a shield because I think they've got a perfect mix in terms of entry level, mid level, and the hybrids and SUVs that they're now developing. The after sales service distribution is a very important component for the auto industry as a whole. And therefore, this is one stock that we'll keep on our watch list as well. And outside these two, I think Swaraj Engines, if anybody's holding that stock, should continue holding. Fabulous set of numbers for this year itself. The volume growth in terms of engines has grown exponentially over the last 3 quarters. Realizations have been better. Balance sheet is very, very healthy. The parent pedigree is very, very strong. And therefore, return ratios look extremely, extremely attractive as well. So I think Swaraj Engines, if anybody is holding as a play in terms of farm equipment, rural recovery, I think can also be looked at.
Selective plays coming in the auto pack. On that note, thank you so much, Mayuresh, as well as Rudra and Kunal for joining us on the show to talk about all of the stocks and the sectors that are looking attractive at this point in time. What's looking attractive definitely has to be Bank of Baroda. Look at the stock. It's actually trading higher by 5%. Will shut shop higher around those levels as well, given the fact that you have Citi that's come out with a positive note. They are betting on the stock and they're hoping the momentum to continue on back of earnings growth. So you have Bank of Baroda that's seeing a good up move above 4.8%. But as we wind down for trade, let's take a look at where the markets are actually shutting shop for trade today, given the fact that you have the markets that has managed to shrug off that entire tariff tantrums coming in from Donald Trump. You have Sensex and Nifty trading higher or shutting shop higher by about 0.5%. Nifty Bank outperforming the benchmark indices with gains of about 0.8% or so. If you look at the breadth, it is neck to neck, which has now tilted that bit in the favor of the declines, but not too many losers at that, because you have Tata Motors as the top Nifty loser, followed by Sun Pharma, Eicher Motors and Bharti Airtel. While on the flip side, Hero MotoCorp, strong gains of about 3.2%. You have IndusInd Bank that has bounced back 3%. Bajaj Finserv as well as NTPC, the other set of gainers in today's trading session. Talking about the sectoral indices then, likewise, if you look at the way how the day has panned out, Auto Index is the top sectoral loser. It will be shutting shop with a percent cut. You have Pharma that's also under pressure, about 0.5% or so. While on the flip side, PSU Bank is doing very well. Like I mentioned earlier as well, Bank of Baroda seeing gains of about 5%. PSU Bank Index shutting shop higher by about 2.7%. Realty also is staging a good bounce by 1.7% uptick coming in for Realty as well. Some of the newsmakers in trade today were Dixon Tech, and let's see where Dixon Tech will be shutting shop in trade today. Along with that, you have L&T, HDFC Bank, you have Prestige Estates. All of these counters were moving on back of brokerage notes. You have Trent also that you can add to this list. EMS players, positive note coming in on EMS players, so keep on your radar the likes of Amber Enterprises as well. But if you look at the way how the markets have been panning out of late, yes, it is the power sector that has been seeing a sharp up move along with the Nifty Bank as well. So power index for the likes of NTPC, Tata Power, all of them seeing good up move in trade today. Also, you have HAL because you have ICICI Securities that's gone ahead and upgraded the stock to a buy rating. Remember that they've got the crucial delivery of an equipment that was needed for their Tejas, and on back of that, you have HAL shutting shop higher by about 1% or so. Mahindra EPC has also bagged an order. You also have Bharat Forge that has had significant news flows around with it. Tata Motors shutting shop lower by about 5%, all thanks to the auto tariff, which will hit the company or JLR sales in North America. So that's the reason why Tata Motors is ending lower by about 5.4%. Tomorrow we come back, a brand new day coming in, and we may have the expiry also out of the way. 0.5% higher is where the Nifty is shutting shop, just tad around the levels of 23,600. And on that note, it's a goodbye from me, Cheryl D'Souza, along with Nikunj Dalmia and the team that put the show together. Thank you so much for watching. See you tomorrow.